Good morning, Tasty Nation. Marco Wine Trade here. Okay, um, I want to do a real quick update. So, you know how yesterday I'll talk real quick about how if the market can beat overnight highs, it's a sign to go higher. And I said I was hoping it would open up and then give it all up. And as you can see, it did not do that. It did break above overnight highs, after hours highs, and then continued to shoot up. Gave back a little, but not much. So on my 15-minute chart, I'm watching this solid white line, okay? So here's why that is important. If it can break below this white line, you see how it kind of just gives it up. But it looks like it's bouncing off. Let me zoom in real quick. Okay, it got down to this and it bounced off. So a lot of people ask Mark, do you scalp, trade, or do you recommend if you want to trade futures or whatever intraday? Well, this is what you'd be looking at. So on the high side, for example, when you see it getting up here on your 15-minute chart, that's when you would, maybe sell short and betting it'll pull back a little bit. Vice versa on the bottom down here, when you see it get to the bottom, well, that's kind of a junk. Let me show you during the day. Bottom here, you can kind of go long, but that's if you want to scalp. I don't really recommend that if you're brand new. But as far as IV rank goes, I'm watching this level 2395 on the ES futures, which is basically like if you go to SPX, same thing, 20. That's the same number on the SPX. On the SPY, it'll be like 230, 239 on the SPY. I'm sorry, on the SPY. So that's the number I'm watching. I wanted to, if it can go below there, hopefully it'll give it up and maybe have a little continue downwards. If not, just keep on doing what we've all taught, what I've been teaching this whole time. So let me go to the daily chart and I'll switch this to 6 months. It's easier. Yep. And I'll auto zoom. Okay, perfect. So as you see, the white line here is different than on the 15-minute chart. I'm just trying to want to see if it'll stay in this range or break down below. Now, if I zoom in right here, and you can use your own charts. So people ask me, do I use my charts to trade? I had a real great coaching call last night, and she asked a really great question. If you have a bias, so let's say you think, even though IV rank is low, as you can see here, 2.9, or if I go to the SPX right here, I'll switch to SPX, it's basically 3.4, right? If you think going into the summer that all the traders, the market's going to be slow, it'll stay in a range because all the traders go on vacation, is that a good time to put on the golden gecko? Actually, even though IV rank, if that's your assumption, that's the perfect time to put on golden geckos because you're betting it'll stay within this range. So how do you know what the range is? Based on current implied volatility and a date range. That's why I love tastyworks. So you could go in, and even if you trade larger, here's what Karen trades with the SPX, right? And let's say you do the golden gecko and you want to know. So you hit strategies. So for those who are new to the platform, I'll walk it through step by step. Because the coaching calls on, maybe you know how to trade, maybe you trade before, but you're just not familiar with the platform. So first you put in the stock symbol you want to trade up here, and you hit enter. Okay, then you're going to go and click strategies, and you're going to go to Iron Condor. You want to make sure normal Iron Condor has a star on it. You want to expand this show advanced, right? You want to make sure this says 45 days. This says click on 1 standard deviation. What this means is you are selling a position that has a probability of expiring out of the money of 84%. And width of the strikes, meaning the width between the short option you're selling versus the long option that you're buying. That's all that means. And it'll memorize these settings for you. Now click on go, and here's what happens. Okay, again, these are for those who are new. Here's how you read this. These on the left are the expiration dates, June 16, 2017. This number right here is how many days to expiration, and the numbers to the right are the implied volatility for that time frame. All right, now if you go to your settings, you're right here. If you click on settings, you want to make sure show range of expected move has a bubble in it, and you want to make sure show only regular expirations for now. and make sure those are clicked, okay? And make sure zone description is checked. Again, if you want help setting all these up, or you want my chart settings here, please like this, hit subscribe. That really helps out a lot. I appreciate that. And send me your email or in the comments below down here, and I will get you those. Not a problem. Just send me your email. Okay, back to this real quick. So once these are set, okay, once you have those settings set, here's how you read this. See these vertical dashed lines? One, it says 2 standard deviation. That means the probability of that happening is about 95% of you finishing out of the money. And then here's the tile of your positions, and you see there's another vertical dashed line. If I move these out of the way, in fact, let me just clear it. Okay, and I'll zoom in. Here's what you're looking at. Here is the 1 standard deviation line on both sides. Here's the stock price. Here's the 1 standard deviation line. That means if you sell a put here, you have an 84% chance of it finishing above this line. If you sell a call, you have an 84% chance of it finishing below that line. If you do both, okay, that's why it says 68%, because you can't be totally wrong on both sides. So if you sell one here and you sell one here, that means you're betting it'll stay above this price and below this price. All right. And here's the 2 standard deviation line. So watch, I'll just put it back what I had on. This is the golden gecko. I'll go to, and see this little tile right here. If you click on this, it'll toggle what is inside these tiles, the colored tiles. The ones on the bottom is the ones you're selling. The ones on the top and the greens are the ones you're buying. See, it says buy and sell down there. So you can toggle, I toggle back and forth a lot, but I usually use this setting right here. What you want is you want the ones on the bottom to read 84%, and you want the ones on the top to read 2%. Okay, so this, because this is SPX, all I want to do is I want to slide these out right there. See this 2 standard deviation line? That's where I'm sliding these out to. And see where it says 2%? Those are the numbers you want to remember. Okay, perfect. So this is a standard golden gecko on SPX. So you're betting, if you, now this is a large, one contract is $2,400. Okay, so this is pretty large. It's pretty large you can go. But anyway, so in the next 30 days, which is 30 days is the closest normal expiration to 45 days expiration. Based on this number right here, this shaded brown area or orange or whatever, this tinted area right here, this is the expected move of SPY in the next 30 days. Okay, so it depends how aggressive you want to go. Say, well, we're heading into summer, you know, maybe next month, should I start betting that it'll stay in this range? Because, you know, all the stockbrokers take off work, they go to the Hamptons, they do, you know, they spend their money. So there's really no action. It'll kind of stay within a range. It'll go up a little, come down, stay in a range. Yep, you can do that. And if you want to be more aggressive, you can move these in. What do I mean by move these in? So look, this is how much credit you're going to receive. You can move the strikes in. So see this width, see these arrows pointing, watch this. Click, 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 click. And you can bet, wow, I can bet, you mean I can bet that it'll stay right in this tinted area? Yep. See this green area? If this stock, this green dot stays within anywhere in this green area, you make money. If it floats outside of the green area, you lose money. So I will go expand this back out to where I was before. Watch, I'll go to, it says 84%. Here we go. Right now you have a 71% chance of you making at least a penny, not losing any money, staying within this range. If you click in the middle, you have a 97% chance of collecting 50% of your max profit in this bet. What that means is you have a 97% chance. You're selling this for $5.40 per contract. You have a 97% chance of closing this for 50% of your max profit, which is you could buy it back for about half of this. You have a 97% chance of that happening. That's unbelievable. Okay, that's great. If you're now to put on this trade, you're going to need at least $7 grand in your account. So that's why a lot of people do the same thing, but maybe they trade SPY. Okay, so I'm going to change this to SPY, right? Okay, so if you're new, put the stock you want to do here, click on strategies, you're going to go to Iron Condor, and all your settings should be saved. And here's what it looked like. Okay, the numbers you want to remember are 84 and 2. See? There you go. And oh, too much, sorry, click one more in. Right, so again, look at your probabilities, stay the same. You're going to collect a lot less, right? Because look, instead of 2,400, it's only $240 a contract. Click on the middle, you still have a, hold on, we'll go 96% chance of collecting 50% of your max profit. So yes, that's a bet you can make even with this low volatility. However, be smart. Do not put on a lot of contracts. You want to trade small. It's all relative. See, so I don't know who I'm talking to. It depends how much money you have. And that's where the private coaching comes in, and I'll set up all your plans for you. But you know, this is a great start for someone who wants to learn on your own. You know, this is free information. I'm glad to provide it. This is one trade that no one I don't believe it gets talked about too much. And what I like it is if I tell you, hey, go put a golden gecko on Apple. You don't have to go, what month is that? What month? What strike? What put are you selling? What call are you selling? If you know what a golden gecko is, all you gotta do is put it in. Apple. You know you're gonna sell the 1 standard deviation put and you're gonna buy the 2 standard deviation put closest to 45 days expiration. You're also gonna do that on the call side. Okay, so oops, I put in the wrong stop symbol. Well, God, I can't type today. See, so here's Apple. Strategies. The great thing about tastyworks is it memorizes your settings for what you want to do. Perfect, see? And you hit go. And then to double check your math, you want to just make sure these line up closest to the respective lines. So I want to move, and then you want percentages, you want it as close to 84. You want it as close to 84 and 2% as you can, but see, there's no strike in the middle. This is about as close as you're going to get. Okay? Now, you can collect 79 cents or $79 per contract. Look at your probabilities, and you have a 90% chance. And look, did I tell you what month? Did I tell you what strikes? No, I don't. Because that's the beauty of knowing what a golden gecko is. You can therefore just look at the probabilities. Well, what if you're not used to this curve form? That's okay. Switch to the table form. Right? If you have probability out of the money here, right, you're looking to sell the closest to 84% and you're looking to buy the closest to 98% on the call side and the put side. And I think I can scroll down a little bit. There you go, see? And in tastyworks anywhere, you just want to get close to the lines. You want to sell the first closest to this first blue dash horizontal line now, and you want to buy the one to the second further out. Here's the strike price for the stock. This is where Apple is trading right now. If you don't even have the platform, almost every platform should have you be able to select probability out of the money. The numbers you're looking for is 84 to sell, 98 to buy. Okay? And the inverse, of course, is probability in the money. So I hope that helps. But if you do this, going into the summer, if that's your bias, you can trade your bias. If you are biased one way or the other, you can do half of a golden gecko. Meaning you can what I call skew it. So I'll go back to, let's say I'll just keep it on Apple to save time. I got 2 minutes left here. Let's say you're bearish on Apple, meaning, oh, Mark, I think during the summer sales are going to drop. I mean, it's going to drop and it'll pick up again once they announce the new the new phone. So I'm betting it'll probably go down in price. So see the strikes right here? You can skew it, means you can kind of bet that it'll be, see how the green area changes more below? You're betting that it'll go down, and that's where you're going to make more money. Anyway, hope that helps. Please, if you like what it is, subscribe and give me a thing and let me know. Thanks.